Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 12th of November 2020, and the time is just approaching 05:30 GMT London time. We've just had the Asian session, we're just starting the European session, and at lunchtime, as you know, we'll be heading into the North American US session. So let's have a look at what happened yesterday then. So these were the Forex complex flows for Wednesday the 11th, and here we go then. So we had a negative pound, a negative euro, a positive yen, and a positive dollar. If we put the figures in, we were plus 98 on the dollar, plus 50 on the yen, minus 59 on the euro, and minus 89 on the pound. So this was Wednesday the 11th of the 11th, which was yesterday. So these are the complex flows for all of yesterday, Wednesday. So we had a positive opposed driver in the dollar, and it was opposed by the yen, which was the positive rock. We had a negative mover in the euro, and we had a negative secondary driver in the pound. Now looking at the flows, plus 98 on the driver, the dollar. We had significant secondary flows out of the pound. If you remember yesterday, I suggested that we were looking for the pound to come off a bit and weaken, and we certainly got that. But you can also see that you've got some quite significant secondary flows, backdoor flows if you like. So the yen was also being pumped up, and so we had quite a balanced situation yesterday. So we had strongish front door flows from the dollar going into the euro and the pound, and we had reasonably strong as well backdoor flows from the yen being pumped up into the euro and the dollar. Now that's where yesterday was. So if we have a look at the intra-week flows, which are going to be as follows. So we've got the yen, the euro, the dollar, and the pound. We'll just write the numbers in. We've got plus 476 on the pound, plus 265 on the dollar. The euro was minus 141, and the yen was minus 600. Now remember, these flows are from Monday, the beginning of the week. So it was it Monday the 9th? So these are from Monday to about half an hour ago. and you can see that we had a negative opposed driver in the yen. So this week we've had a negative opposed driver in the yen, and we've got a negative rock in the euro, we've got a positive mover in the dollar, and we've got a positive secondary driver in the pound. Right, so all we need to do now is have a look at what's been happening so far today, which is Thursday. So if we look at intraday flows, so these are intra-week. So that's intra-week. This week. So the intraday flows then are as follows. So we've got the pound, the euro, and then we've got dodgy chalk, and we've got the euro, and then we've got this usual, or seemingly quite usual situation of we've got a neutral situation here. I'll explain that in a minute. And then finally we've got the yen at this end. So if we fill in the numbers, the yen was plus 95. The dollar was 0.0. And the euro was minus 31. And the pound was minus 64. Right, so we've got a positive driver in the yen. We've got a neutral rock because it's zero. We've got a negative mover in the euro. And we've got a negative secondary driver in the pound. So these flows are from today, Thursday, whatever it is, the 12th, from the open to about half an hour ago. So, if we look at that situation then, like I say, when you get a zero here on very short-term flows, you know, if I'd taken the reading, say 10 seconds either side, it could have appeared in this camp or it could have appeared in that camp. So what we're looking at then is yesterday. If we start here, yesterday we had positive driver in the pound, but it was opposed by the yen. And if you remember from the briefing yesterday, I was expecting pound weakness, and I also suggested that in a short-term trade you could have a go at long euro pound off the basis of the analysis we did yesterday. Now they sort of did a number on the euro yesterday, to use the American jargon. I'm not even sure what doing a number means, but basically it meant that the euro went down. Now let's have a look at what actually happened to the euro pound. The euro pound, the low, I'll just write, the low of the euro pound, according to me anyway, was 88,612, and it closed at 89,079. Now that was, you know, approximately 46 points or pips, whatever you want to call them. So from the low of the day to the close was 46 points. Now, if you looked at the daily graph, you'd say, well, all you've done there is is bounced from the long-term daily low. Now that is true, but our analysis wasn't based on any of that. Our analysis was based on flows, front and backdoor flows. Now, when it coincides with clear technical levels, in that case it coincided with a low in the daily, a significant low, then that's all to the good. You can actually use that in your favour. We use technical analysis in the sense, it's all very well the senior trader chucking it in the bin, but we actually use secondary technical analysis after the fact. So we could say, and the trading part of it, if you'd gone in first thing in the morning, you would have been hammered down to the daily low. You'd have been hammered down to, where was it, 88,612, and you wouldn't have been having a nice time. You could have potentially, you're looking at minus 40 points on your short-term trade, which isn't what we're after. So this is where you need to understand how to trade the models. And I was having a word with a senior trader yesterday, and basically he was saying that there's way too much information to stick into a single video on how to trade the models. It would just be sort of gloss over job, and rushed. So he has basically said that we're going to do a separate series or parts of how to trade the models, and the first part, as I said, will hopefully come out this weekend. So it's going to need to be a bit more involved, otherwise, because if you trade the models in certain ways, you can actually ride this euro fall relatively free, and then get the bounce, providing you've got the flow data in your favour. Anyway, we'll leave that for now. That's aside the case. So we had this draw out of the pound via dollar strength, and we had significant secondary backdoor flows into the yen as well. Now, for the week, if you look at the middle line here, so far this week we've had we've still got the yen negatively driving. Now if you remember, we looked at the monthly chart on Monday, and the green line, the yen, was way up. So the yen had plenty of potential to come down, but it has actually strengthened up a little bit this week. So what we're looking at there then is we've got, as I said, we've got the opposed negative driver in the yen versus the positive secondary driver in the pound. So we've got two conflicting situations. We've got the yen has plenty of room to come down, and indeed was coming down, and we've also got the fact that it's slightly strengthening up this week as well. So, and that's quite frankly off the back of equity flows. And if you look at US equities, the Nasdaq got a real pasting and has recovered about half its fall, and the S&P 500 has sort of been more resilient, but is still on the soft side. So normally, as I said, you get if you get equity disruption, you get a rise in the yen, which we have actually seen, and that's one of the more normal transmissions. We'll do more videos on transmissions and how they fit in another time as well. So anyway, that's where we're at there. And then finally, this morning so far, we've got back to this yen strength again, and the dollar is sort of saying, I'm the rock. I'm quite happy where I am. Positive flows are being matched by negative flows, so nobody's pushing me around at the moment, whereas the pound is still on the soft side. So the action really is in the yen and the pound again today, and if you look at the data prints and what's around the corner, I've written this down somewhere, remember only so much, but basically today we've got GDP in the pound. We've got German CPI, which is all tier 1. We've got Bailey's. He can't stop talking, can he, that Bailey? Anyway, the Governor of the Bank of England, Bailey, a bit like myself probably. We've got US CPI, and we've got Lagarde's speech. She can't talk yet, stop talking either. Right, so, and then Friday, which is the last trading day of the week, we've got Euro GDP and the Michigan consumer sentiment, which is on the US side. So to sum up on the data print situation, really it revolves around CPI data, GDP data, and meetings. So that's what we're, and there are a lot of tier 1 events there. Now they are going to be knocking the markets around in sort of regular intervals. Every 3 or 4 hours the market will get knocked around, and depending on what side they come out, you could end up getting both barrels in the wrong direction or in your direction. It's very difficult to say. So let's look at what's likely to happen today. So as I said, we've got a continuation of pound weakness, and we've also got yen strength. Now this is going to be highly dependent on, without sounding like a broken record, the equity market. Now the equity market has had a good kick up the butt basically, and people are wary of being long equity, and as such this is putting upward pressure on the yen in risk off transmissions. And the pound, if you remember, was the unopposed positive driver, which we correctly assigned in this case as a top. Now that was useful, but where are we likely to go today then? So, well, if the Asian session is any indicator, then we're going to be still sort of not happy piling into equities. We're going to have probably yen strength and further downfall in the pound. So the yen and the pound are where the action is. The dollar, as I said, is buffered. It's got people saying I'll have some of that, and people saying no you won't, I'll give it back. And the euro is, as I said, because like they were going to front run the euro data, and to a certain extent they did front run it on the downside, and then we had this bounce. Now the problem is, as I say, we've got all this conflicting data which could really knock the markets around. So if you wanted to take a short-term view, and believe me, you're in rough weather here, but if you want to take a short-term view, you could do worse than look at the pound yen. And the pound yen, let's rub this off. Get some room here. Talking about the pound, yesterday I didn't even mention our trades. We're as you know, we're 20% long on 38 trades. So we've got 38 trades running, of which 19 are short, 19 are long, and these are all in the pound complex. I am obviously quite patriotic. I'm here in the UK, but I don't think that we just trade the pound here. It's just coincidence. Now the pound. So we've got 38 trades in all. We've got 19 short, 19 long, and we've got our long trades are 1.2 times the size of the short trades, giving us net 20% long. Now, through all that chaos and garbage being thrown at us yesterday, we are currently plus 1,850 points up, which is actually near the maximum of where we've been generally. We have been slightly higher. We've been knocking on the door 2,000. So things are nicely balanced, and that's going to be, that will form part of one of these parts of how to trade the models. Now this is a full complex trade. This is a big boys trade. This is you know, the pint of vodka trade. It's every single pair in the complex, the seven pairs of the complexes. But that's for another issue. So right, anyway, back to where we are likely to go today. As I said, probably if you wanted to have a go at something, then you've got the pound yen. The pound is likely to carry on getting on the downside, and the yen is likely to get some positive flows in, but you're going to get chopped. So you could if you're nimble, wait for the data accordingly to come out. And we don't really like trading like that, but I know a lot of you are, or some of you are short-term day traders, but that'll give you a good head start anyway. If we get an equity ramp up, then the yen is likely to, via all the usual transmissions, weaken. So in which case that will invalidate that trade completely. So take care. Wish you good luck trading today, and the bottom line is unless you're doing like a modelled trade which will buff you out from this stuff, then it's a case of good luck. It's going to be choppy, and all the best, and I'll see you tomorrow morning.